Yo, what's going on, everyone? It's Chase back with another video here. Just to be upfront, I've been a little more quiet the past couple days. Took a couple of losses, not fully in the zone. Before making this video, it's taken me about 3 days to make this video. I really wanted to have something that I thought would be a solid idea, get back into the rhythm. Nothing, that hurts me. I take losses all the time, but, I typically try not to produce a lot of content, post a lot of charts, make a lot of calls if I'm losing, because I don't think anybody really wants that. So, we're back. Like I said, spent the last couple days trying to think of some decent ideas and how I'm feeling. It's a very weird time. Obviously, best of luck, best wishes, whatever you want to say, to all the people in Ukraine, all the people affected by the war. But nonetheless, the markets continue to move, and I'm not sure if that had a effect. It definitely did in the beginning. In the beginning, it had an effect that I thought that markets should be acting more bearish, and they didn't. We got a spring instead. So markets can act very, as we know with the whole COVID thing, markets can act. But back then there was the Fed intervention, right? So I was like, okay, well this time around there isn't the Fed intervention. And there's just a lot of bad, macro, a lot of bad fundamental things potentially coming from this. I thought we'd be seeing further downside. But we didn't, and which is fine, and now I'm willing to shift my bias after seeing, a couple of days of this occurring. Now, with all that said, there is still the possibility that things can go differently in Ukraine, or Russia gets more aggressive, or, I'm not a politician, or I don't, a war expert or anything, so I want to minimize talking about that, but I want people to understand that if there was a time that you needed to step away from the market to do some things, now is not a terrible time, because this, in my opinion, this price action and this fundamental analysis is not necessarily lining up, and it's a pretty risky time, in my opinion. Okay? Risky time to trade. And it definitely threw me for a little bit of a loop, and I'm happy to admit that and let you guys know that ahead of time. And but I think I'm back with some decent ideas here, and we'll get into it. So as always, big shout out to PrimeXBT for sponsoring these videos. You could sign up with my link at the bottom. You get up to a $7,000 deposit bonus, I believe. Make sure you enter the promo code before you deposit. If you want to support my channels, support these videos, that's the best way to do it. All right, so let's get started. All right, so first let's discuss the levels, and then let's discuss the idea, potential ideas around the levels. So when I feel like I'm out of sync or whatnot, I really zoom out. I start on the monthly, I go down to 2 weeks, I go down to 1 week. Now we're here on the 3-day. In my opinion, it's just the cleanest visual picture, and that's what I'll be using at the moment. So what we can see here is a major run up into putting in a range high and a range low, and we can see that basically each time we're in this range, we usually go from side to side. We didn't go from side to side here, which is interesting to me, right? We can see we go from side to side, we go all the way in, we go from side to side again. So we didn't do that this time, go all the way from side to side, which, makes me think that there is still a possibility that we could still go down more. Tag this demand that, as we've often talked about, pretty much everyone's talked about. It's a pretty obvious level, sweeping everything. But this does look like a pretty decent double bottom here, combined with a pretty strong bullish divergence on the 3-day, okay? So it may just be possible that we're not going to fill this range from side to side this time. But when we break out of this range, what typically happens is we typically go from side to side again. see all the way to 58. We're at 57.7. Okay, we're just going to call it 58. When we break below 58, all the way from side to side. Now this time it only went halfway, but look what it did. It came back down, started at the range low, all the way to 58. Okay, all the way back down to the other side. Are we going to do that again? I think, I don't want to get people overly bullish here, get people, forced into spot positions and whatnot, because I don't know if that's necessarily the move. Like I said, I think it's a high risk environment right now, and I think all that has to happen is the headlines have to change a bit, and a great setup could turn pretty shitty. But here's what I'm looking for. I'd like to see us close on the 3-day. I think it's also fine on the daily. We can see the daily here as well. We've been seeing quality respect of this level. Okay, so if we can see a strong daily close up above here, I'll be looking for any type of a decent pullback to get long, targeting. There's a couple targets, right? We have something like target 1. We have another thing like target 2 right here. And then we'd have target 3 ultimately at around the 58K level. Okay. How would that look? I mean, so if we get a strong daily close out here, definitely starts to get a little, we have to think, where are people going to FOMO? Where are people really going to get antsy about not being in position? Because look, I missed these lows. Like I said, there was some peers of mine who, posted some longs today, some solid entries. I praised them for having that conviction throughout, this whole fundamental time and, everything that's going on in the world. One second. But yeah, I wasn't aboard for this. So, I mean, where would I feel FOMO-y? That we can start with that. You can often ask yourself, where would I feel like, damn, how am I not a part of this? I guess if it kept going past this level, I'd be like, man, what's going on? So maybe we do rally just hard without any, because you know how Bitcoin rallies. It rallies hard without any major pullbacks, and then eventually it does give you like a super nuke, like a quick flash crash, and that's your opportunity to get in, right? So I think what we watch for in this situation is we watch for a strong daily close, and a 3-day close is nice too, above this level. Okay, so we close somewhere up in here. We have a nice strong close. If we pull back immediately, it's a level to watch and possibly get long off of. I do think that there's also a potential for deviation to be in here. I would not... Look, if Bitcoin's bullish, right, regardless of where you buy in here, if Bitcoin's bullish, it should not be going back below 39.9-ish. So anywhere, if I look to get in anywhere around here, my invalidation will be somewhere around here, because we know how Bitcoin acts. If Bitcoin's bullish, we want people to be, on their heels, ready to, they're fiending to buy. They want to buy so bad. So I wouldn't be surprised if this is the level that holds. I wouldn't be surprised if this was the level that holds, just like right here, the very top, breakdown, flips into resistance. This resistance flips into support. Okay. Something along that nature. Why is I hate when that happens. I click the thing. Yeah, something like that. Okay. And that is possible after we daily close, right? But so my point is if we get the daily close here, regardless of where you're looking to play your long off of, whether you're waiting for, lower time frame to try to figure it out, or if you just want to leave it blind, whatever you're going to do, I think invalidation below, 39.7-ish, somewhere around here should be a decent point of invalidation. Now, just to be clear again, my Bitcoin trades the past couple days have not been the best. So, I do feel like I'm slightly out of sync. like I said, I've looked at the chart many different ways for many days now before making this video. I feel like I'm getting a grasp of what's happening, and that's how I'm seeing it. So looking for daily close, you probably get a bounce, but it's probably not the real bounce. Then you run that, and then you go and you start tearing this place apart. Little rejection, something, not much though. Run all these highs, maybe into here, pull back, something to shake people's confidence and finish it out to 58. Yeah, that's just, speaking from the gut right there. So that's the closest thing you're going to get to what I feel like will happen. But yeah, we don't know for sure. Okay, so that's how I'm seeing it. That's sort of my invalidation areas. If you really wanted to go even stronger invalidation, then you know where demand is. Demand is all like where your quote unquote demand would be, but we know, like I said, we know how Bitcoin acts. Bitcoin acts, and it takes if it's very bullish, it'll bounce off here, or it's going to bounce off of here, one or the other, in my opinion. Okay, so we discussed how we gathered these levels: range high, range low, right there, range high, range low. Range high, you could also mark it here, but in my opinion, I just went on the 3-day and I said, okay, resistance, support, resistance, origin of impulse down. I just see a lot of confluence in this area, and that would be my final area of take profit if I end up getting some type of a decent long in here. Yeah, simple as that, really. Okay, moving forward to ETH. Range high, range low. I don't, you can mark out this, but I never really felt like this was necessarily the level to bounce. I guess it's somewhat clean. This bothered me. Support, resistance, but it was like, you resisted all the way up here. It does, it is accurate with the candle closes, but I'm just never a fan of when price action doesn't, I guess when it doesn't play how I want it to play, but also, in my opinion, when it just doesn't play cleanly. I didn't think that this area was very clean in here, and I just didn't have much of a read on ETH. That's why I haven't been posting ETH much lately at all. I do think, we're obviously seeing current resistance level right here. Was support, flipped into resistance, rallying again now, just as Bitcoin did. You could just see basically support, bottom support right there, closes above, support, okay, boom. So if we can rally above here, and then you have basically a gap in towards here, and then you'd have anywhere between 36.3, which is what I've been talking about for a while, but then looking at it even deeper, I do think that you could see potentially even 38. We could see the push above, deviation, breakdown, flips into resistance for a bit, but then it's sort of turns into your order block that forces price upwards, right? It comes down, we can see obvious confluence right in here as a support on the candle closes, and then we can see rejection here. I think if we did come up, again, target 1, target 2, at that point, if we got above 38, pretty damn bullish in my opinion, but I think that's sort of where we would tap out. Let's take a look at the 200-day moving average. Has us right around 36, which is this sort of the TP1 area. Okay. We can do the same for Bitcoin and just take a look real quick. Oh, look, it has us right around here. Remember I was talking about price coming up into here, and this is where I would feel a little FOMO-y. I said if it started to get past here. So that does make sense, lining it up with the 200 daily moving average. If we did break above and we rallied up until here, up into here. I feel like this should be our first place to see somewhat of a pullback. And if it did start pushing past here, I would definitely start to feel a little FOMO-y about that if I hadn't found my entry yet, right? Hopefully I do find my entry before that. Okay. And now moving on to S&P 500. We can just go straight off, start with the weekly. You can see a range high, a range low. When it breaks above, you're getting, fresh price action, so to say, and you come down, it serves as resistance. You run it, the swing low, you get a strong response. You run the low, or you run the run, so to say, right? And okay, we break back in. Now if we look at the weekly, we can see support, candle close below, and we're just going to break it down all the way. Go down to the 3-day. Again, we can see candle close, rejection right there. Okay, go down to the daily, and we can see that was origin of impulse, resistance. Okay, and now we just go down all the way to like 4-hour. So we could see obvious confluence, and just by looking at this, you could tell that this is sort of like the point, the midpoint of the range, right? Essentially like the EQ of the range. It's very close, not on the money, but it's close. And we can see the confluence over here. We could see support or resistance flip into support right here. It causes the rally upwards. And then we have a sort of up move right here off of this demand. We lose that demand right here. What happens when we lose that demand? The prior demand flips into resistance, breaks down, comes back up, tries to test it again, rejects again, rejects here again, rejects here again, rejecting here again now. What we'll need to see from S&P, or here we're on the E-mini futures, but what we're going to need to see, it's all the same, right? ES1, S&P, SPY, SPX, it's all essentially the same. Don't let it confuse you. What we're going to need to see here is just, a simple push above, probably a retest of something like this, a little bit of a deviation back below, and then we're looking for, target right there, target right here, okay? So we're looking at 4491 and looking at 4522, okay? And again, this is all very short-term bullish, right? Don't get overly bullish on everything. Just as I would never get overly bearish on everything. Make sure you're keeping your risk in check with these things, right? You don't want to be taking, that's something that happened to me the other day. I was a little bit too bearish, not on Twitter, just on my own, and ended up taking a 3R loss in one day, which is just not what I like to do. If I take my loss for the day, that's okay. If I take a second loss for the day, that's okay. But if I have, I think I had two things stop out at once, and then I tried another thing and I stopped out again. So taking 3 losses in a day, 3R in a day, it's just not what I want, and also sort of against my rules where, I said I typically try to, keep it capped to 2R a day. Never lose too much. Let the head cool down. Just calm down a bit, and you'll come back feeling better about everything, and you'll get a cleaner read. Okay, 1 second. So that's really it for the technical aspect of everything. Again, not going too into depth right now because I'm trying to get back into my rhythm. Outside of that, is there anything to talk about? I think we already sort of covered some of the psychological stuff, just if you're uncomfortable about current trading conditions, it's very simple. Just don't trade. If you trade for a living, hopefully you're already in a place where you don't need to win every single week to support yourself or your family. That's It's not really a position that you want to be in. Things can get ugly and volatile, and you can have, poor streaks, and you can't let that wipe you out, and you can't let that force you into trading more than you should be. If you're performing poorly, you need to probably slow down, probably reduce size until you feel like you're back into a rhythm. That's what I'm doing now. I've reduced my size a little bit. I haven't taken a trade, I think in a day or two. Just laying back a little bit. That's it, laying back, developing more of a high time frame plan. And when that high time frame plan starts to play out and potentially go in my direction, then I can break it down a bit more and get back to my old lower time frame stuff where I would typically find my entries. Okay? That's going to be helpful. Anything else? Yeah, it's a tough time. We went from COVID to straight into war, and obviously this, COVID affected me, of course, but the war thing, all I can do is really, feel bad and be upset, but feel for people from the outside, but it doesn't really affect me directly, but I know for a lot of people, and including me, but for me it's a bit of a whole market thing, is that you feel very disconnected from their world because you're not a part of it, and then you see, especially with the market, you see the markets rallying, and you see people very excited to see the markets rally, happy to see the markets rally, and it just feels wrong. It feels off, to me at least. But that is what it is. The markets have no emotion, and the best thing to do when trading is to have none or very little emotion about the asset that you trade, about how your trades are going. You can monitor your success, monitor your failure, make adjustments, but letting yourself get too euphoric usually ends up you giving back a lot of profit. Too fearful or too anxious, you're usually going to close before you can let your trade play out and get to profit. There was a tweet I posted about not focusing too much on the on what could be, right? Like if Bitcoin goes to 100K, oh, we can pay off the house. If Doge goes to, if Doge goes to $5, I can finally get that Ferrari I've always wanted or something. When you put that type of stuff in your head, you stop looking at the chart, and you just become a dreamer. And you're not going to win in this game by becoming a dreamer. If you want to be a dreamer, if you have $100,000 portfolio, if you want to be a dreamer, throw $200 into some brand new coin that you are really fundamentally bullish on, and it only has a $1 million market cap or something, and hey, maybe it'll blow up to be $1 billion market cap, and you can look back at your what is that, in 1,000x, a million to a billion? Yeah, I think so. You can look back on your 1,000x, and there you go, right? You now you can afford that car or whatever that you wanted probably, but when it comes to trading, you can't. When it comes to trading, and also when it comes to these higher cap assets, like your Bitcoin, your Ethereum, you can't really just say, oh, F to 10K. I mean, if you're financially secure and you're holding for F to 10K, okay. But if you're financially secure, you're probably not. You probably don't need F to 10K. Like if you need F to 10K, and F to 10K is where you get the dream with all the all the butterflies and everything is beautiful, and your house is paid off and you have a Ferrari, and don't let that dream cloud what's currently in front of you. Stay objective. You can have a goal, that's fine, but don't dream too much, because if you dream too much, then you won't be paying attention to the process, and if you're not paying attention to the process, it's very unlikely that you're going to hit those goals. Okay, I think that's about it. As always, shout out to PrimeXBT for sponsoring this video, and shout out to all you who come and hang out each week. And like I said, I delayed this video for like 3 days because I don't want these videos to ever be something where you come and think, oh, Chase wasted my time with this one. I know your time is valuable. My time is valuable as well. And I try to make sure that I'm always putting the best foot forward with these videos. Like, retweet the tweet, leave a comment, leave a question. Everything is cool. It's all helpful. And yeah, that's about it. I will catch you guys next week. Peace out.